Welcome everyone to Vested Interest. This is Shane back with a stock pick of the day video. It is February 5th. We're going to take a look at one out of the consumer discretionary sector. This is Estee Lauder, and this one is a suggestion from a subscriber and reviewer of the channel, Tanya Myers. Thoughts on EL? I own ATKR, and this is from our at core video yesterday. If you haven't checked that out, go ahead and check that out. And that one was actually pretty popular. I own ATKR, and I plan to buy more. It is down right now, so it might be one worth taking a look at. But on this one, let's take a look at Estee Lauder and see how this one is. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday when the market's open. We take a look at a company's stock that's pulled back on the day, run it through the screener, see if it makes it onto my watch list. And just because it makes it onto my watch list does not mean that I am necessarily buying it. It just means I'm interested in doing more of a deep dive into the financials of the company, looking at their balance sheet, their income statement, their debt to equity ratio, stuff like that, price to earnings, how they compare to other companies. Are they paying down debt? Are their margins expanding? Is their revenue expanding? So those are some of the things that I look at along with others. I also do a discounted cash flow analysis, try to get an idea of what I'm willing to pay for the company. So again, just because it makes it on my watch list does not mean that I am investing. There's the thanks button down below. Also, for any of you who would like to buy me a cup of tea, doing all that does not cost you but a couple seconds of your time, and it really does help out the channel. So thumbs up, hit that subscribe button, and ring that notification bell. Share with anyone you think that might find value in the content. And a special thank you to the subscribers and the viewers of the channel. You guys are awesome. The channel continues to grow because of people like you. All right, this is the Vested Interest Stock Screener. You can pause this, look at the criteria, tweak it to your liking, add to or take away ones you don't like. Just note that it must meet 5 of 8 to make it on my watch list, unless it is a company out of the financial sector like a bank or a insurance company, and then I add in price to book. You can use price to book for any company, just don't blindly use one as fair value. All right, back over to Estee Lauder. You can check them out on their homepage, www.esteelauder.com. That's www.esteelauder.com. That is their homepage where I pull this from. And they are a makeup, skincare, fragrance provider. That's what they do, right? You can see here some of the products that they provide, gift sets, fragrance, makeup, skincare. Like I said, so your mom, your sister, your girlfriend, your wife, your significant other, may use this, grandmother may use these products and you don't even know it, or maybe you use some of these products yourself. I know my wife definitely has some Estee Lauder products in her drawers there in the bathroom. So do my daughters as well. I probably don't want to know how much my wife and daughter spend on makeup, to be honest with you. And the reason we were taking a look at them, down 5.08% on the day. We are talking about the Estee Lauder company. Ticker EL, again out of the consumer discretionary sector. Close out the day at $65.94, 5.08% drop. I think they've actually been dropping quite a bit lately, but that's a big drop nonetheless. Now, they do have a 52-week range as low as $62.29, as high as $159.54, market cap of $23.72 billion, a beta of 1.04, so just slightly more volatile than the overall market. They did not have a price to earnings ratio listed, leads me to believe it's negative. Their EPS per share is negative. Earnings date May 1st, so that will be coming up here. If you want to check out their earnings report that they release out, excuse me, will be on May 1st. Forward dividend is $1.40 on the year. I believe they're a quarterly payer here. Dividend yield at 2.02% currently. Ex-dividend date February 28th. Looks like that's not quite right. If that's the dividend date and the ex-dividend date is February 28th, they would be paying after that. That must have been their last dividend back in December. They'll pay out, if that's the case, that was their last dividend in December, they will pay out in March. And 1 year target estimate, at least according to Yahoo Finance, of $80.97. So they do see some upside from here, but not back even close to its 52-week high there, $159.54 versus $80.90. So some upside, but not a ton. Now, jumping over to dividend yield theory, I like to look at this and see if the company is potentially undervalued. It's just a quick back check. It does not necessarily mean it is. You want to do more of, like I said, a deep dive into the financials to do that. But this one gives me just a quick reference. So I look at their 5-year dividend yield average, 1.32%. I compare it to their current 2.02%. Over here where it says forward, 2.02%, same number. Since their current dividend yield is higher than their 5-year average, that speaks to undervaluation on this one, at least according to dividend yield theory. Now, payout ratio, extremely elevated. I would definitely be worried about a dividend cut. And to be honest with you, by the time we're over with this video, I think they may have already announced a dividend cut, and it just hasn't showed up in their dividend payouts yet. But their payout ratio is extremely elevated, 471.43%. So not good there. Going back in time here, you can see June 2021. June 2021, they had 2.9 billion in free cash flow. June 2022, it was down to 2 billion. June 2023, down again to 1.5 billion, and June 2024, down to 1.4 billion reported out. So I do want to note, though, on the repurchase of shares, they are repurchasing shares, 733 million in 2021. Now, I would say the drop that looks like a drop in 2022 is definitely offset by the repurchase of shares here. 2.3 million in shares, or 2.3 billion in shares pulled out of the market, with a drop, what looks like a drop from 2.9 billion to 2 billion in free cash flow. But again, this more than accounts for that drop based on the shares they pulled out of the market. June 2023, they still were pulling shares out, 271 million, but I definitely see that as a decrease in free cash flow, because that doesn't account for the decrease. And same thing here, 35 million in 2024 shares pulled out, but it doesn't account for the drop down from 1.5 to 1.4 billion. So definitely decreasing free cash flow, at least since 2022. Now, the analysts do call this one a hold. This is over from stockanalysis.com. This is another source I go to for information. I recommend more than one source so you can make sure the information you are getting is accurate and up to date. They do have 18 analysts that have taken a look at this. They do call it a consensus hold. And if you were to go to stockanalysis.com, you could look at each one of these tabs, see how many might call it a strong sell, a hold, a strong, or a buy, and a strong buy. Go through that, and it would tell you where they all rank. I mean, it's leaning towards a buy, so I'm assuming more people are calling it a hold or a buy than are calling it a strong or a strong sell. But right now, the consensus out of the 18 anyway is a hold. Now, they do have a low estimate of $70. It currently sits lower than that. So if it was to come back up to this $70 estimate, that would be a 6.14% increase from where it currently sits. They have an average estimate of $81.94. That would represent a 24.25% increase. And if it happened to hit their high of 100, and this is pretty close to what we saw with Yahoo Finance's projection on the previous page, if it happened to hit their high of $130, that would represent a 97.12% increase. And that still would not be back to their 52-week high. Now, I like to look at statistics. I like to look at all the statistics, but one I like to look at initially is return on equity and return on invested capital. I like 10% or better for both of these metrics. Return on equity is sitting at 3.86%. That is very low. I want it to be higher. It does not meet the 10% I'm looking for. Same thing with return on invested capital. It's a little better at 6.37%, but still does not meet the 10% I'm looking for there. Now, EPS growth is forecasted, even though it's negative currently, it's forecasted to grow extremely fast, 37.4%, and revenue growth is forecasted at 4.4%. All right, they are quarterly payer. Again, payout ratio, they say 249%. Either way, I think Yahoo Finance had it in the 400 range. Either way, extremely high. Definitely worried about a dividend cut. And like I said, I think they've already cut their dividend. And if this represents how high their payout ratio is still, are they going to do another dividend cut or forego the dividend altogether? I'm not sure if that is represented here, but we'll keep going. Dividend growth, again, negative 11.74%, so I believe they've already cut the dividend. Buyback yield is positive, so they're doing it efficiently whenever they are buying back shares, and shareholder yield is positive, 2.15%. They do pay out on the March, June, September, December timeframe like most companies do. As you can see here, they were paying 60 cents going back to May 2022. They raised that up. No, okay, there it is. November 2022 to 66 cents. And then they kept it at 66 cents all through 2023, all through 2020, well, all through most of the way through 2024. And then it looks like here back in November, they cut the dividend from 66 cents down to 35 cents. So it does look like they've already had a dividend cut. But again, if this payout ratio is representative of where they currently sit, 249%, I think Yahoo Finance had them in the 400% range, still extremely high. And does it mean there is going to be another cut in the future? One to watch. All right, let's run it through the screener. Understand the business again. They're selling perfumes, they're selling makeup. That's what their skincare products. That's what they're doing. Like I said, if you're, your wife, girlfriend, sister, mother, grandmother, aunt, yourself, you may use some of their products. They do have no growing free cash flow, so no check there. Growing dividend, no. Looks like they recently cut the dividend. If someone owns this one, let me know. Was that a dividend cut? Certainly does look like they have recently cut their dividend. Dividend payout ratio is not under 75%. It's well over 200%, if not 400%. Check valuation based on dividend yield theory. Dividend yield theory actually says it's potentially undervalued, which is a surprise with the recent dividend cut. Again, I'm wondering if the information hasn't caught up yet, and that their dividend yield theory is off based on the old dividend. I don't know, but that's something to watch as well. It is within 15% of a 52-week low, so check there. Return on invested capital, return on equity are both under 10%, no check. Now, earnings per share growth was smoking high, over 30% projection, so check there. 1, 2, 3, 4. This would not make it into my watch list. I would not be interested in doing more of a deep dive into this one. As a matter of fact, with the dividend yield as high as it is, I would really be worried about a dividend cut on this one, or another dividend cut on this one if they haven't already. That's my thoughts on Estee Lauder. Well, that's really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Estee Lauder. Is it in your portfolio? Is it one you're watching for more of a pullback to buy? Is it one you're buying now? Or are you part of the reason that it's falling? And is it one you've recently sold? Let me know in the comment section down below. Tanya, I don't know about this one. The yield really worries me, or the payout ratio, I mean, really worries me. I would watch this one and definitely do more of a deep dive if you are going to be buying this one. Well, that is it for this one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and invested journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.